Welcome traders, this is the pit. It's been a while since I've done a video, so I thought I would review some calls I made a month ago. Here are just a few. In the NASDAQ, I said it was time to buy to channel Jim Cramer. This was from August 9th. I said it was time to buy, and since then the NASDAQ is up 2%. So that's a great call. I also said gold was on the cusp of a breakout. And since then, gold is up 7%, and I'm still on target for $4,000 by the end of the year. I also said ES was on track to reach 7,200 in the next few months, maybe by the first quarter of next year. Since then, ES is up 2%. And finally, I said Ethereum in the crypto space was set to outperform Bitcoin in the coming weeks. Well, since then, Bitcoin is basically flat and Ethereum is up 10%. Welcome to the Trading Pit, personal investing tools and techniques for the active trader and investor. I am Lundy Hill, and this is not investment advice. What follows are the charts that I highlight in my substack, and the link is above or below here, for the week ending September 12th, 2025. First, let's go to gold futures. Gold had a strong rally on Monday, and it congested for the rest of the week, forming a nice dynamite triangle. This is a nice tight formation with tight closes. Friday, yesterday in fact, tried to break out to the upside, but prices did not hold that breakout, and prices fell back in. In my opinion, the low risk trade is still to the upside on the breakout of this dynamite triangle that I've highlighted here, with a stop loss either back inside the triangle or below the low of the triangle. My intermediate term target is $3,720. And then, like I said, my longer term, or actually I haven't said this yet, but my longer term target from previous Substack updates is still $4,200 by the end of the year. And let's go to crypto, not Bitcoin, but the other one, Ethereum. Like I said, Ethereum is up 10% since I said it would outperform Bitcoin, while Bitcoin is basically flat in that time. Here I've highlighted a few recent buy signals in Ethereum. First is the saucer bottom labeled SB. This is a Investor's Business Daily technique, and this formed at the start of September. These are the daily bars. Then on Wednesday, we had a four-close reversal. Note that the previous 4 days to Wednesday were very tight ranges, and all the closes were grouped together. This is classic four-close reversal. A buy could have been taken on the Wednesday's close around 43.50 with a tight stop loss below those closes. A great place to find one of my 9 patterns that signal a trend change is around these lows. Note that this reaction to the saucer bottom was right around the high of that previous pivot low. And like I said, this is where you need to be trying to find buy signals, and my 9 patterns are perfect buy signals. You can find all of my 9 patterns in the link in the description. Next, let's go to S&P's 500. The S&P 500 via the ES Futures market. This is the ES Futures daily chart, and stock indices made new all-time highs this week. And as a mentor of mine once said, that is never bearish. Of course, Friday was a narrow range day. It had no follow-through. This tells me sellers came in or buyers left, or maybe a little bit of both. For the week, though, ES was up 1%, which is very nice. Looking one day ago, Thursday's action was a definite range expansion bar, and that's bullish too, and it was a yum breakout into new all-time highs. What's a yum? A yum is a wide range, low open, high close near the very top on the upside bar. And that spells profit in my father's language. I would think this rally continues. Of course, FOMC meeting is next week, so who knows what they'll do. The odds of a half a point drop in interest rates is only about 7%. So some of me thinks that the Fed might disappoint, but they seldom do disappoint, do they? Check out the arrows on this chart. This is a chart pattern I found while just going through some files. This pattern is about 10 or 20 years old. The wins are in black and the one loss is in red. So I cover this in detail, and I reveal this pattern in my substack. Next, here's a 15-minute recap. I go into detail in my substack on this, but I'll cover some of the patterns here that I really like. I like coming into that fifth, which was Friday. You had an afternoon breakout, which is not always bullish, but very frequently bullish. But then on Friday, you had the exhaustion gap, that's EG, exhaustion gap open, and a 2-bar flip-flop, 2-bar FF, which turned down, and then you have another yum-yum to the downside here, which dramatically breaks through the prior day's close. That would have been 2 Thursdays ago's close. That tells you that prices are heading lower, and that's exactly what they did. And they form a Joe Ross 1, 2, 3 pattern, and I've highlighted that here. And a place to take a nibble long would have been at 3, right around the high of the previous pivot low at 1. The high of the low bar around 64.70. And you note at 3, prices broke that and then sprung right back up. That's evidenced by the tail. And then from there, price had a nice rally, and then it pulled back into another kind of Joe Ross 1, 2, 3 pattern that I've highlighted here, right around the close of that previous Friday, the close of the prior week, which is a very important key support or resistance level. And then we noticed on the 9th that prices dropped a little bit down towards that close of Friday, but then they made new afternoon highs. And I love new afternoon highs because I think the market will carry through the next day. And that's exactly what happened. You had a big gap up SOS. SOS stands for sign of strength, with a little bit of follow through and then a pullback down to the prior day's open with a 3-bar equilibrium up. So again, strong afternoon move up, not into new highs, but still very, very strong. Then you had the gap up, another sign of strength on Thursday. And then you had a morning ORB, opening range breakout. And these are 15-minute bars. This is a 15-minute breakout. Again, this is one of my father's favorite patterns. He was one of the first people to trade the opening range breakout. He was giving talks on this back in the 1970s. In fact, he and I have given talks on the opening range breakout in 7 countries and 5 different languages, to brag a little bit. So I guess the takeaway rule here is new afternoon highs and lows should be heeded for potential carry through the next day. And always watch the prior 2 days' closes, especially the close of yesterday and the close of 2 days ago. Next, let's go to the bond pit. And this is a picture of the bond pit from, I don't know, late 80s or early 90s. And that's me. I was a local in the bond pit back then, scalping treasury bond futures, 30-year treasury bond futures, where I did up to 10 lots at a time, which represents $1 million. Here is the TLT. I like this chart better than the bond chart for this pattern. First, note it's got an island reversal down below the support point down there at 86 level. You had the gap down on September 1st. Actually, that was the 2nd. And then the next day, you had a gap up and move back up into the Rubicon channel. That is strength. And the island reversal is actually my pattern number 1 in my e-guide, 9 patterns that signal a trend change. A link is in the description. This was followed by another up day and then a breakaway gap, which gapped above the Rubicon channel, gapped into new pivot highs, and that was followed by yet another gap with follow through. And then the last 2 days have made even higher highs. But again, I am flat as FOMC as next week, and who knows what they will do. Next, let's go to copper futures. I came to copper looking for a reason to sell, but I think I have a reason to buy. Copper ended July with a huge gap down open. This is not shown here. This was a result of some tariff news. The rule of going with the break of a gap day played out nicely here. It's not shown, but after the gap day, I like to play a buy above that gap day's high or a sell below that gap day's low. Here we had a break above that gap day's high, and I believe that's the green dotted line, which on late in September, this is a 4-hour chart, you had the gap down and the test of that line, and then a rally back up with another huge, even bigger gap up, forming an island of prices that don't connect to the previous or following bars. And again, this is my pattern number 1 in my 9 patterns that signal a trend change, and I think it did. And then moving forward, we see that price carried through to the upside and then pulled back via another gap where it traded a few days. I've highlighted both of these gaps in circles. I'm talking about the second circle here. You've had about 3 or 4 days here. And that was broken out by a gap up above the entirety of the ranges of that island, hence the term island, with a move up. What's not shown here, which caught my attention first of all, was that MACD did not confirm these recent highs. So you have a possible divergent top here. But delving deeper, I noticed that COPX, COPX, that's the ETF for copper miners, is at 12-year highs. So I don't think you can fade the copper miners. I think they know a little bit more than most average traders know. So I'm expecting maybe a little bit of a pullback here and then a move to new subsequent move highs and maybe even higher. Next, let's go to coffee. Coffee's had several clear buy signals in the last few months. This is the weekly chart. This is a chart I showed 4 weeks ago with a Joe Ross 1, 2, 3 pattern. Note that this was in the second week of August. Clearly there's a 1, 2, 3 pattern after a down move, which I cover that in my Substack. And you buy strength off the number 3, which is the test of the lows at 1. You had a 2-bar flip-flop and then a carry-through. I said you should buy that. And here's what happened. Prices rallied dramatically. So that was action of 3 weeks ago forward. And then you had a pattern number 9 buy in that up move. You have how many bars in a row up? 6 or 7 straight bars up. So that's my pattern 9 of my 9 patterns that signal a trend change. Next, let's go to the current up-to-date chart as of Friday, September 12th. I've got it highlighted here. I've got the Joe Ross 1, 2, 3 pattern from July to August, and then the big rally. And we're approaching this trend line top, which goes across the highs for the year. And we had a dramatic breakout up of the previous pivot high on Friday. And I'm expecting a move above that trend line. And I'm expecting a Fibonacci extension to the 1.62 level, which puts prices above 460. Next is soybeans. Let's go over a couple of grains. I did the analysis of this on Thursday, unfortunately, Friday's bar chart or Friday's action is missing here. Unfortunately, it fell through the cracks in my trading because Friday soybeans rallied over 12 cents, so that would have been nice to catch. I keep a log of trade ideas on my trade sheet, but I think a dedicated log is what you need with every day's expected plays and what you're thinking about playing for the day. So soybeans had a nice head and shoulders top. I've labeled it here. This is a very short-term head and shoulders top covering just a few weeks. And I've highlighted the neckline and the gray line sloping from lower left to upper right. And then the red line is the head to neckline, and that projected exactly to about where the prices went. Also note that that is equal to the 50% reaction point of the entire move up from the August lows to the August highs. So you should be trying to find a reason to buy at that level also after such a dramatic move up. And that's what we got. We bounced strongly off that 1022 area, and I believe now we're at around 1047, which is the top of the Keltner channel. Note that the Thursday's action was also a bullish engulfing bar. A low-risk trade would have been to buy the close of Thursday with a stop below the low. And if you do a wave projection up, a wave projection of the move from the August lows to the August highs, and project that forward from these September lows, that puts prices on soybeans around $11. Of course, I like to take a 75% move of that, so plan accordingly. Measure that and multiply it by, measure the wave up from the August lows, multiply that by 75%, and then put that into the September lows, and that gives me my target. And finally, first time covering this here, let's talk about corn. Corn broke out of a distinct dynamite triangle. I've noted that over the last actually 2 weeks here, with the gray line denoting the dynamite triangle. This presents a definite defined risk long trade. I would try to wait for a pullback on the 4-hour chart to get in, with a stop either back inside the triangle or actually all the way below the triangle. Of note here is that the move into the triangle was 40 cents. So I expect a 75 to 100% move out of the triangle. So that puts us into the possibly 450 area. Note that my big gap up rule definitely applied here, and it bears repeating. You go with a breakout of the big gap day. See the big gap day, I've highlighted the high and the low of that bar, and the very next day it broke through that high, and that's when I should have been buying. I hope this brought some value to you. Please like and subscribe. Let me know how I can make this better. Let me know any markets you would like me to address. Happy trading.